What is going on, everybody? Welcome in to our second episode of the Deal Spotlight, where we're going to cover a deal that just recently happened, actually. Crown Quest and Oxy. Oxy goes ahead and swoops up what was people are considering one of the last big dominoes to fall in this entire M&A consolidation. The other one obviously being Endeavor, which I assume we'll end up covering here whenever they sell. We'll cover it on, but really wanted to look at this deal from a couple perspectives. One of the fact is that it's a private or a public buying a private, which introduces a bunch of different interesting things, but it also forces us to ask a bunch of different questions. Specifically, did Oxy overpay? And that's, I mean, Stu, I don't know what you've been hearing on the street, but I've been hearing from people I know, industry contacts, aka people you just know in the business. Everyone, the sentiment around there is, whoo, Oxy overpaid a little bit. And
I don't know, Michael. And at the end of this, as we go through this, I want to put my final verdict in there.
yeah, and this will be a fun one to dive into, guys. As always, we appreciate the sponsors of this segment, Combo Curve and Wealth Database, for providing us the tools to be able to make this analysis. We highly recommend you guys go check them out. It's wealthdatabase.com, combocurve.com. You can also see everything in the description below here. We're gonna have a little open source GitHub file where you can see all the files that we are about to create, so to make sure that you guys can follow along and do the diligence with us, as we like to say. So super excited for this one. Let's go ahead and begin, Stu. So this is going to be a little bit different than episode one, Stu, because the focus of this is a little bit more financial than it really is focused on the type curve. I mean, obviously, we're going to have to get in here and build a type curve, but the crux of how we have to answer the question of, is this a good or bad deal, or did Oxy overpay, or did they underpay? Did Crown Quest get a great deal? Whatever that answer is, when we go to look at kind of evaluate this deal from a whole, we have to answer two specific questions. One, how much did they pay per location? That number is going to drive the answer to the question. Why is that? If you pay too much for undeveloped locations, you will never, unfortunately, be able to roll the deal over and make enough money on it. I mean, you can see that. I've seen that in my career over and over and over, not on the scale maybe such as this, and maybe this isn't necessarily the concern, but that's what we need to figure out. What's the PDP? Strip that away from the development of the availability of development, and then figure out what did they pay per location, figure out what locations are worth, and then see if subtracting that amount per location still makes economic sense. Because they make some pretty intense claims in here, which we'll go through. But on the other hand, and something that I know you've been talking about, Stu, is what are interesting about these public deals is there's all this other stuff that around with it, with the carbon management and some of the water stuff that we'll talk about. So we're going to have to, we unfortunately have to keep, unfortunately, because it's not fun for me, I like the finances part of it, we have to keep that in mind when it comes to evaluating this deal. And does that then close what is, I said this in the intro, Stu, the word on the street is they overpaid for this asset in terms of Oxy overpaid for. I mean, you talk to any one of my buddies, you talk to people who I know in the business, there's just a sense of, they really overpaid for this one. Well, why is that? And why is there a premium on the things that specifically I think you'll bring up? So that's kind of the overview here. We're not going to go too long, 15, 20 minutes. Keep it a little short this time, but super excited about this one. But the first thing we need to do is dive in and learn a little bit about the deal. So I've basically, you'll see this spreadsheet. We'll release this and all of these notes, kind of a little open source model we'll do, so you can check that out. We'll probably host that on GitHub just to make ourselves feel cooler than that. But really, we went ahead and found the press release, which you can find on the world's greatest website, energynewsbeat.com, maintained by yours truly, Stuart Turley. We go ahead and pulled out kind of what I would consider are the transaction details that we care about. The breakdown of the cash, equity, and assumed debt. So we hear the number $12 billion. It's really $10.8 billion because that's the cash and equity that they're selling. They're assuming 1.2 billion of debt, which is pretty good considering how big Crown Quest is, Stu. It's actually amazing they only have 1.2 billion of debt. There's an ownership structure here that's actually a partnership between the Dunn family, who owned some previous assets, and Lime Rock Private Equity. I think they're called Lime Rock Resources, whatever. It's about a 60-40 split. That actually doesn't matter in this overview that we're about to do, but I think it's helpful to kind of understand the split, that they are technically, private equity backed companies, so they're obviously going to come in there and make sure they squeeze as much value in a transaction as possible. Interesting, you got an average net working interest of 93%, which is really good. 79%, also very little non-op, which makes this deal a lot easier to evaluate, if only because we don't have to worry about the non-op's hard to figure out what a private company owns, because remember, Crown Quest is private. So the part about evaluating this deal is Oxy has a lot of information available because they're public. They're required to it. Thank goodness the SEC forces people, we're about to, forces people to share this type of information. So it allows us to get this. Crown Quest is a little more, I don't want to say a black box, but we're going to have to rely on our friends at Well Database and Combo Curve to get us that PDP value, which is then going to help us build what probably will be a Wolfcamp type curve, similar to what we did in episode 1. I know if we're going to dive in right now and start looking at a little bit of their assets. You got a lot of Sprayberry, but while I do that, Stu, what was your initial thoughts on this deal as it happened? I mean, we're about week and a half away. What were your thoughts on this?
Well, there's a couple things. First, it was announced on their press release on the 10th. And then let me look here on Newsbeat, it was the 14th. Warren Buffett bought an extra $590 million worth of Occidental. And here's where it triggered me. I went onto Well Database and looked at Occidental's carbon injection wells. And so if you search by Oxy and then search by their wells, just go up to that,
pull
and
up all of their wells right now. Let me find their. I gotta search. Where's my operator?
And then it gives you an option type of well.
I'll make a project for us, but go ahead.
Okay, and they had 6 injection wells on the coast that were there. However, when I saw the thread going on, the thread that brought up to me, Michael, is I still am doing some more research on this, and I don't have access to Combo Carbon to double check. But you take a look at Well Database, they're starting to pull in the well injection for the part that Warren Buffett's really interested in because of the carbon tax credits that may be coming around. You may be seeing all these other things. That is something I'm trying to dig in on this deal and find out second order effects of this sort of investment. Does that make sense?
Yep. And I think the other part that we have to, the other side of the deal is, what does the combination of Oxy and Crown Quest look like on a go forward basis? I think that's the other probably part of the deal that, people would say, well, okay, great. Maybe they overpaid a little bit for Crown Quest, but now this gives them access. They don't have to do anything for a while. Or look at the value creation for the shareholders. If we go look at the transcript, we pulled the transcript, Stu. What's Vicky saying? I mean, here we'll go pull the slides here, Stu. You can see them on right now. What do they say? Value drivers, emphasis on free cash flow generation, high margin current production. They're going to increase their dividend somewhere. We go financial details. Right here, their quarterly dividends increasing to
4 to 22.
It's a huge increase, but that's beginning in February 2024. So they're really relying on that free cash flow they hope's coming from Crown Quest, which we'll figure out. So that's why figuring out what Crown Quest, their PDP, is worth is wildly helpful. So let's go back to our friends over at Well Database. Like you said, so here's Crown Quest overview. I mean, if there's one thing to say, Stu, they're consolidated. If you look at this, they're in one area. I mean, they've got a few stragglers up here, but everyone's got a little bit of that. They have a really nice consolidated position.
And from a management side on the E&P, that's a cost savings for their oil field service.
Oh my goodness.
And anything they need to do, it is cost savings, dude.
Here's their where's the acreage overview? Right here. So look at the acreage. So first off, look at the blue's Oxy. So you got this picture right here.
Wow.
The blue is Oxy. They have to make a cutout to overlay Crown Quest assets over. I mean, that goes to show this image, in my opinion, right here tells you everything you need to know about what Oxy thinks of its own assets. Or they don't have locations to go drill themselves that they feel are cheaper than the Crown Quest ones. I mean, again, we're going to answer the question. It's just pretty funny.
It is. There's a lot of things to this deal.
Yeah, there's a lot of things. As in, Crown Quest is a blip on the radar when it comes to Oxy's footprint in the Permian. So these better be prime assets. I'll tell you that, Stu. These better be some prime assets.
Our theory after the 3 years of working together, Michael, good numbers equals good management. And I've seen some good things from Crown. Even though they're private, we have not seen the numbers totally, if that makes sense. We're only looking out in.
Yep. No, we are we're looking. We're looking indeed. All right, we're exporting here, folks. That means we get to go over to our favorite app, Combo Curve, from when it comes to economics and load it up. This is when, Stu, I need you to talk a little bit about this carbon capture stuff and how you see this being valued, because that's going to be a huge part of what Oxy sees as the valuation here. I just need to get a forecast put together and get it into a scenario. We saw how to do that last time. You can follow along on the screen, but really, Stu, I want you to take over and talk for a bit.
Well, here's the deal. The model for ESG investing has hit a brick wall. It's kind of like now when you take a look at Occidental, you take a look at it is going ESG, but it's going through the carbon capture, carbon taxes, and being forced to a carbon footprint tracking is critical. And so the move to, with comp, so the whole thread, Michael, ESG investing is failing. BlackRock has lost over $5 billion in the ESG funds. There's more ESG funds failing. Investors need their money back. It's now not a it's not a kill oil and gas. It's a transition at the best economical time. And I think on Kerry's private plane and Al Gore, you could hear them decompressing very badly in their airplane on the way back. Anyway, so you've got your ESG investing, you've got your carbon capture, you got your carbon tax, and Oxy is set up. And I think this is what Warren Buffett is really looking at, is where does Oxy make profit? He's an about all profit. So I am still working on this aspect of it. I'd love to get Vicky on and talk about it.
Would you?
Oh, absolutely. I'd fly to her headquarters, since we know that Warren Buffett's plane knows where that is.
Yeah, that was a good catch by one of our favorite Twitter follows. That's crazy.
Yeah. Oh, absolutely.
So the next thing I want to ask then, I guess, is what differentiates Oxy from these other big oil companies, I guess?
Well, that's a great question. As we were talking about the other ESG issues, you take a look at Total Energy, as we say in Texas. You take a look at BP and Shell. They all went green, and they were trying to get rid of oil and gas. We've seen them with the death of ESG investing coming around the corner, that they're having to go back to profits. This was solidified with the head of OPEC saying, don't agree to any killing of fossil fuels, because we're going to pay for the energy transition with our oil and gas. The Oxy, and then you take a look at Exxon, you take a look at Oxy, they took a more balanced approach appropriately in our main oil and gas companies. It was a balanced approach to ESG, and I liked it, because they're now really looking at funding their ESG projects with things like the carbon capture, the carbon injection wells. Oxy's ahead of the curve on that, especially because they're going to be making money on the what I consider almost a scam, and that is the carbon credits. Hey, it's a way for them to make money. And I think Warren Buffett is on it.
No, okay. So there are a couple of things there. So you think Warren Buffett is ahead of the curve? I think he understands. I actually would counter that to say I think he's of the mindset that things are going to revert back to oil and gas, and I need to get in bed with a company, and this is a company that's allowing me to do it and giving me a big seat at the table. And as you mentioned, they're in the category of big oil. So I feel like, remember he was Salomon Brothers. He was the CEO of Salomon Brothers for many years during that time period when they were going under, and he's very familiar with as you mentioned, the big stuff.
Oh yeah, but the thread is Oxy, ESG, carbon capture, Exxon, ESG, and they're looking at other things like geothermal, and they're pulling out lithium out of Arkansas that they just did. So both of them are looking at funding, just like Saudi Arabia, energy transition using their core products. So both of those guys are doing exactly that. They're following the Saudi Arabia management. Make sense?
Yep. And while these forecasts are loading here, I think it's going to be helpful I want to talk real quickly about how we're going to go evaluate some of the PUDs, because that's kind of the next thing we're going to do in concert with this is really, as you notice, they're touting, if you go to the slide, this is the slide deck that we've got available in the show notes. You've got Clear Fork all the way through the Woodford, okay? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 different target benches they claim they have.
Right.
Only Crown Quest and Oxy know what the split of those 1,700 locations are.
Right. But when we looked at Well Database, it had some good stuff, dude.
It did, and that's, we've got our forecast done here. That's awesome. What you'll notice is I love to go look at the completions tab and kind of the breakdown. They're a heavy Sprayberry player. Now, the interesting part is their Wolfcamp wells, which they've drilled more recently, have also come in with an average higher IP. I just noted right there, which is super interesting. But a lot of Sprayberry, okay? A lot of Sprayberry wells. So what we should probably do is get both a Sprayberry and a Wolfcamp type curve put together, and then that combination will guide us to some insights on, okay, what is that per location cost? But we've got our data here run. One of the things I like to do, Stu, is you can run a diagnostics. So, I mean, for us, it's really hard, Stu. You've got how many wells here? 1,200 wells, I think, are in this forecast that were active wells.
Right.
We can't look at every single forecast. I can't tell you if every single forecast is good or bad. But what the diagnostics can do is do a lot of the hard work for you and consolidate the data into a way that allows you to see outliers very quickly. And it's running right now. Probably will take a little bit. We're at 88%. We got to love the speed of the cloud, folks. 96%.
Oh, yeah.
Whoop, whoop.
Plus, I like your new workstation.
Well, I don't think there's anything to do with the workstation, but the new workstation is really nice.
You're a freak, and I probably.
So right here.
I keep up with you.
Now what this is showing us is all of the different wells layered into a percentile, okay? And one of the things I like to do, you come here, you have all your different variables that you can look at. My favorite, because I just want to I'm looking at how far off, was absolute error. And now what I can do is start looking at, okay, I have this group of wells here. I need to probably go look at these wells and figure out what's going on with these. Maybe the auto forecast messed up. Maybe there's some weird recompletions that need to happen. But most of our wells fall within that nice 0% quartile. You've got the the absolute relative error distribution right here. I like to look at it like buckles. I mean, we're under really the majority. That's a really good bell curve, as I would say, for a distribution, which means we've got pretty good forecasts for all these wells. We could go in, hopefully Oxy did this, was going and looked at each well and just boom, 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 click through. Hopefully they didn't just, run it willy-nilly like we are. But this is a good way, and I love the diagnostics view in Combo Curve that gives you an idea of how are my wells spread out amongst each other, and do I have a really large variability? Stu, you'd say, I actually have a pretty tight variability. I actually feel very comfortable with the wells these come in. I mean, if you were to see this distribution skewed more this way, what would that tell you? They suck.
Yeah.
Absolutely. So I wonder, while we build this scenario, Stu, again, it's going to be fairly cookie cutter here. We know what we need to do. What else, when you're thinking about Oxy's the carbon capture credit system and where Oxy wants to go with all of this stuff, do you see them trying? You don't see them doing a hard pivot, do you?
No. I see them. Take a look at Elon. Why was the EV so successful at Tesla, selling offset credits? And so when you take a look, that's just pure gravy, and that's what Oxy is able to do, is pure gravy.
Absolute pure gravy. So we're just adding in the wells here.
Subsidized by the government.
Look what we can do, folks. We can go, and this is another interesting thing about Combo Curve that I really like. We can go into other projects, a.k.a. the Matador project that we did, and go get the same well headers, so we don't have to worry about doing them again.
Cool. Sweet. I like not wasting time.
Now we go Jan 2024. We love that. We can save as. We'll go ahead and use that model. Yeah, it's just now we got to get our reserves in here. We know all of these are PDP, so we'll make our PDP model. We'll save as. We'll use. We know our ownership from our little handy-dandy spreadsheet here was 93 and 79. 93%. 79%. There's a slicker way to do all this, I'm sure. Not really. This is about as slick as it gets, Stu. It's about as slick as it gets. Oh, sorry. 9. And we're just going to assume a 75% leasehold. We'll go ahead and save as. We'll use that model. Dates. When the effective date on this, you know when that is, Stu? When was that effective date? I think it's February.
Well, the press announce was the 10th, so I don't know. I have to go look. Let me go look.
I think it's February, right? It's when this closes. Let's look. Because that's key. We just want to make sure we get the right close date. See when this actually closes. Financial overview.
Transaction.
I think it closes in.
You can just throw a February in there because I believe you're right.
February's the move. I think February's the move.
Right.
Yeah, we'll do February. We'll go hit February here. So I should really go change that. So we'll make this 2. Make this 2. Luckily, we have no CapEx. We're going to go, max come cash flow. We'll call this Feb 2024. Save as. We're going to go ahead and use that model. We've got no CapEx. We're going to go ahead and get the latest strip price. Yeah, this will be interesting to see what they got that strip price at.
Oh, yeah. I love that feature when you can go in and just get strip price.
It's just easy. And I like their advanced view much better. We get the full stream. We get the NGLs. They're not really rocking any NGLs. We're not going to say it. We're not going to go ahead and worry about NGLs. So you could if you wanted to, but we're not. We'll add some differentials in here. My guarantee is they're probably getting a 98% diff, and then on gas, my guess is they're getting base price remaining. My guess is they're going to get a 65% differential. It's just what Waha. It's unfortunate. It's unfortunate.
Yep. It's the way it is.
It's the way it is, folks. Gas differentials right now in the Permian are not good. So
no.
Good luck to anybody trying to drill for gas. Have fun.
Yeah, it's part of the dog, as my granddad would say.
Expenses, I like to go. Let's see if we can go grab. That's an net expense model. We won't use the one from last. All right, we'll go ahead and add in a price model here. I'm going to do a base flat rate of about $10,000 a month. That's going to cover pumper and electric costs. What I also am going to do here is add in a variable cost. Excuse me. We're gonna do this period oil other percent what dollar per barrel. Perfect. This is not dollar per barrel. We need to make this fixed. Excuse me. Wait a second. Fixed expense. Perfect. 10 a month. And this has to be deleted.
Yeah, at the time we're filming this, it looks like the futures are rolling in around the 71, 78 for WTI.
Really?
76.22 for Brent, and nat gas is 248.
Whew, that strip. What's the strip price look? What's the forward curve look like?
I don't know. Let me go look.
55 cents. And we're probably going to assume that they have disposal. So just to kind of walk you through what I did here, we've got fixed expenses of about $10,000 a month. That's going to, it's going to be high. It's going to be low for new wells that just turned on. It's going to be high for wells that are already producing, but we're going to add it on $1.50 a barrel just for other charges that may occur. We've got a gas maintenance, or we've got a gas processing fee of about 55% or 55 MCF. That's just normal maintenance on gas wells. They're going to be a little bit cheaper, so they're not really drilling for primary gas, so we got to add a little bit in there, but I like to just have a little buffer in there. And then water disposal, about 50 cents a barrel. One of the things they mention really heavily is the water infrastructure. I forget where they had it in here. They had water in here somewhere, but basically it was their water disposal was like 400. Here we go. 55 miles of freshwater pipelines, 473,000 barrel water disposal facility, 4 recycling facilities. So they're going to have plenty of disposal. I'm not worried about disposal. If we were, that'd be about $3 a barrel. So that'd be a bit much. It'd be a bit much. Conveniently, they're mostly in Texas, so we can just go ahead and just apply a Texas taxes, save as, use the model, and I think we are good to go. We have everything that we need outside of applying the forecast, which we ran. Perfect. 43, okay, so we've got a few of them that didn't exist in the forecast, but that's okay. We'll still be able to run. Those are just, again, those are wells that you're going to have to dive into, but what we're, again, attempting to do is get a cursory overview of, again, is this a good or bad deal? So we're going to run this scenario. We're going to see what happens. All right, Stu, we've got this run now. It's some big wells, Stu. It's some big wells. 8 million barrels gross oil. Yikes.
Wow.
Absolutely insane. Now, I mean, that's a scam. But let's go ahead and pull up the
scam.
Not a scam, but that's over the life of the well. I mean, those are outliers. Like we'd have to go clean those up a little bit.
Okay.
But let's see what the PDP is, because remember, we got to get back. We got to get back on track here. We got to get this PDP value. So we've got it loading here. They're building. Oh, wait a second. We want aggregate. I'm an idiot. We were getting the well by well. That might take a bit.
Ooh.
We want the aggregate.
Aggregate.
Here we go. Cash flow aggregate. And the answer is, on a discounted basis, $2.77 billion. Okay? Look how quick that was, folks. Look how quick that was. And guess what? What I've been seeing, everyone's saying it's about $2.5 billion for the PDP. So you can see.
Say the number again.
What's up?
Say the number again.
$2.77 billion. You writing that into our little spreadsheet here?
No, I'm not. But go ahead.
1, 2, 3. 1, 2, 3. Love it, Stu. So right now we're sitting here at $2.7 billion for the total. Okay.
What was everybody saying it was?
$2.5 billion for the PDP. That tells you how close combo curve gets you. and not close combo curve gets you, but how quickly using a tool like combo curve can get you to that answer. It's been about 25 minutes, maybe even 10 minutes, and we've been able to use well database and combo curve to get a $2.77 billion PDP when if you just do 170,000 barrels and do the industry standard 25, 30,000 per flowing BOE, that gets you $2.5 billion, the number that people have been saying. So there's a reason these tools are powerful, folks. There's a reason why you got to use tools. So now we know what the base.
If you want to make a decision, you got to have the data. You got to have the data if you're going to make a decision.
Absolutely. So now what we get to do is go ahead and build our little Wolfcamp and Sprayberry type curve. All right, so let's go build our Sprayberry type curve here. So a couple things we need to do. We need to go build Sprayberry, but one of the things you got to be careful of, folks, is the fact that you got to have less than 500 wells in your type curve format, which is fine. So we just need to make sure we filter down to certain wells. We're going to do two things. Target formation, we're just going to go get all of our Sprayberry wells, okay? Then what we're going to do is we're also going to find lateral length. We're going to go find perf lateral length, okay? And we're going to only do wells 6,000 to 9,000. And that's going to filter us down to about 109 wells. That's going to be perfect for kind of our Sprayberry look, okay? Apply, create, and now we've got ourselves kind of a tight Sprayberry ring right here, which we like. And we see that nice distance right here. We'll probably go for a 2-mile lateral, or 7,500 feet is what we'll normalize to. Okay, so you see there's some bangers here, Stu. But first thing I like to do is look at our ER distribution, and you got to clean this up. There's no way I believe that there's that'd be the best well that'd be the best, literally the best well to ever been drilled onshore. Not happening. So we're going to go ahead and exclude that.
You think that's a little anomaly? Is that what you're saying?
Well, we're going to take the same amount on the bottom and exclude those as well. Again, trimming that top percent and bottom percent is going to give us a little bit more of an accurate view, okay? And now we've got a bunch of stuff right here. We've got our average, we've got P50, we've got all that stuff. So now we're going to go back to our normalization. We're going to go ahead and do a 1-to-1 fit, okay? Just going to make sure, and we're going to target this at 7,500 foot lateral. It's already at 7,600, but we want to target 7,500. We're going to copy all those phases to the setting. We're going to go ahead and normalize. What's that going to do? That's going to hopefully give us a much more even distribution and normalize to a 7,500 foot lateral, okay? So now what we're going to do is we're going to come over to our fit, and we're going to probably do incline. You know, you could go, again, we could mess around with a lot of these settings, but at some point, what combo curve is doing is fitting the best settings to the curves. So the more you constrict the settings, the less you allow the beauty of the software to work, which is I want the software to test multiple different B factors and tell me what that could or could not look like. You know what I mean? I don't necessarily need this to do this. So I don't necessarily need to constrict it that much. So here we go. You can see the type curves here. You know, we've got a P10, great wells, your P50, your P90, everything you're going to need. It's an interesting split here, Stu. These Sprayberry wells, they come on strong. They come on really strong, but then it seems like they chill out a little bit.
Define chill for our podcast listeners.
I mean, a 200,000 barrel EUR is not that sweet. For a 200,000 barrel EUR, it's not that sweet. Now the problem is these wells massively decline, okay? And you can see that, you know, they've got wells below it, they've got wells above it. Decent type curve. So there's 3 different fits we've got. P10, P50, P90. Those are the traditional ones that people are aware of if you've taken statistics or if you've kind of, you know, been in the oil and gas business. You've heard people talk about the different, we hit the P10, we hit the P50, we hit the P90. This specifically also gives us a fourth one in the best fit, which is kind of what would be a fourth way to view the type curve. And again, all a type curve is an aggregation of wells. You know, there's a lot of science and a lot of reservoir engineering that goes into doing things like this, calculating exactly what your reserves are. It's not just let's pencil whip this into a software that gives us, but it gives us a good idea of the overview of it's just, if we were to go drill any Sprayberry location, this distribution gives us a good idea of where that number might fall. We can't just be throwing darts at a wall. We got to constrain ourselves one way or the other, and also give the reservoir team or people who are doing more volumetric analysis an idea of maybe where those bands are, because maybe they're going to be able to tell you something about, we feel like because of our knowledge of the reservoir, we're only going to be able to hit that P10 zone. You know, I find it interesting. We go back to this Occidental PowerPoint here. They went ahead and talked specifically about the fact that the Barnett Shale, let's go ahead and find it here. They talked specifically about, and I think it was in the press release here, Stu. They mentioned something right here. Added positions enables Occidental to build its deep horizontal Barnett well leadership. Okay, so let's go back to our thing here. Barnett, deep horizon right here, super deep. Okay, we're talking about Upper Sprayberry and Wolfcamp right here. They're talking about, we also get this Barnett stuff. But look at this. Added position enables Oxy to build up its deep horizontal Barnett well performance leadership, in which new well production was 34% better than basin average. What does that mean? They feel like they have a strategic advantage and will only drill good Barnett wells. Says every other oil and gas company, we only drill good wells, because why would you drill bad wells? That's the funny part. I always like to think.
But stats. Hey, good management, good numbers, and if you got a trend, trends matter.
So, and there's something they feel like. So maybe that's where a reservoir engineer would come in and say, we feel like we can absolutely hit this. All right. So let's go ahead and do the same thing for the Wolfcamp wells. And then we'll go ahead and figure out what we think they're worth. Wolfcamp type curve. So is there anything else, Stu, on this deal that we need to hit?
I think we're good, because after we do this, I'm going to take your project and well database project, and I need to go when I'm sitting down on the couch watching something silly, kind of work through the numbers, and stuff will hit me.
Yep,
if
absolutely.
that makes sense.
So first thing I'm going to do is we're going to clean this a little bit, because there's no way we're getting this type of, we're going to have to clean this a little bit, but we got to love it. So let's go ahead and do this. We're going to go ahead and exclude the top band. Go ahead.
Yeah, you got some lone hangers out there.
Oh, yeah. We got to get rid of the low-hanging fruit, as we like to say. Oops, I didn't get
Or the hanging chads, right?
The hanging chads. Yeah, that's what it is.
Yeah, it's hanging chad.
Absolutely. All right. So now we're looking good, Stu. Now we're looking good. Let's go to our normalization. That's interesting here. They've really only we're not going to do any normalization, because it feels like we've got a little bit of a data squabble here, but we're going to go ahead and say
I was going to say that
they're drilling 10,000 feet here. They're drilling 10,000 feet. So we're going to go back over here to our fit. We're going to just assume that we like what Combo Curve is telling us, and we're going to run this, and let's see what we get here for our type curve.
Boom. Like it.
And they're all recent. We should have skimmed these a little bit. You can see some of these wells in here we've skimmed out. Here we go.
Look at this.
Now we're looking at about 400,000 barrels. Pretty good for you're talking a 2-mile Wolfcamp. It's not horrible.
Nope. Wow.
So now what we do is we got to come in here. We go to our project wells. Let's go and create some wells here. We got to create Crown Quest PUDs. And we'll just call this, we'll do this here, Sprayberry. We're going to create 2 wells. I'll just change the name on the second one, so we only have to go through this once. So we'll go next, create. We now got to go, let's go find those wells. We want to take one of these. We want to go view that well. I'm going to call this bad boy Wolfcamp. Save. View the well. Looks like my names to look good. Now we're going to come back to here. We're going to create a new project, create forecast. We're going to call it PUDs. Filter these wells, well name, Crown Quest. Perfect. Apply. Create. Hey, we just got to apply some type curves here, Stu. Apply some type curves. Again, we'll make it effective February 1. Wait. No type curves. Do we not save them? It's possible. I've done that before. Yeah, we didn't save our type curves, Mike. Yikes.
Hey, Mike, you need to save your type curves.
Save the type curves.
Yeah. Safety tip.
Safety tip. Save the type curves. So we'll get the Wolfcamp one.
Yeah, Ed Davidson on LinkedIn is an absolute hoot for safety tips. This won't make that cut, but it's pretty funny.
So now we got it saved. Successfully saved the fits. We'll go back here. Let's get our Sprayberry saved. Do.
You know what the difference between a near miss on a well and a near miss here?
It's millions of dollars.
Well, a head. Near miss on a well could be losing your head when the wrench falls off the top of the deck, and here it's like, oh, we had a near miss. Let me click the mouse again.
Yep, absolutely. Save the fits. All right, now where were we? We're gonna take the best fit. Which well we were doing first? The Sprayberry.
Yep. I wonder who names these things.
Sprayberry's a formation. I mean, it's been around. I mean, you missed the trend on that one.
Yeah, I know, but it doesn't hurt to ask. Say it's kind of like a famous author saying something really brilliant. Who names these things?
That's a good question. So now we've got our type curves, folks. Now what we're going to be able to do is just go back into here. We'll be able to make our headers. So I like to do reserves.
It's a good thing I'm not naming any formations in the geological structure. I'd be coming up with Scooby-Doos or Shaggies or...
You would?
Or Yodas.
Yeah, you would have some weird names.
Yes, I would.
2 wells to this scenario, folks. And these are going to be... We'll get them named differently, but we're going to go ahead and add a reserves category. These are proved, non-producing, or I should say undeveloped, non-producing. Use model, ownership and reversion. We've got this. The beautiful part is, Stu, we just got all of these nice models, okay? CapEx. Yep. Aha, now this is where we've got to add a little bit of CapEx in there. So this is where, in my opinion, it all comes down to what your drilling team can do. I'm going to go ahead and assume a 2-mile Sprayberry or a 2-mile lateral. We're going to have to differentiate between the Sprayberry and the Wolfcamp, because Sprayberry's on top. We go back to our type curve here. It's a little bit cheaper to drill a Sprayberry than it is a Wolfcamp. So we're going to go ahead and say a 2-mile Wolfcamp is going to run you $8.5 million. Okay, and we'll call this the Sprayberry. Why $8.5 million? I just conveniently I've got a little bit of and we'll go ahead and use this for both of them. We got to pop out of here. So Wolfcamp's on top. Yeah, we'll go ahead and one of the things we like to do, pin to the left, just so you always know. Or Wolfcamp's on the bottom, so we need to come in here. Excuse me, this should be Wolfcamp. Wolfcamp's going to be probably, Wolfcamp's going to, we'll do a, hold on, delete this row. I need to completely do another one. Wolfcamp probably be 9,250 million. Okay, and we'll call this Wolfcamp 9.25 million. Okay. Why is that? Well, conveniently, I've just worked Sprayberry and Wolfcamp horizontals recently. I tell you, pricing very, very close to what's going on in the field right now. Well, the problem is water's going to cost you a boatload. Now, we're lumping everything in to those CapEx numbers, okay? So don't shoot me here. Don't shoot me here. But, you know, water's expensive. People don't take into account the fact that you got to find a lot of water. Now, we've got a recycling facility. You're going to tell me Crown Quest is recycling all the water. Great. It's still going to cost you a decent load. We're going to go ahead and load in those differentials. We don't have the stream properties. We're going to go ahead and take this model. This model is going to underestimate a little bit, so that's probably one of the things we might need to go back and worry about. But I think we've got everything right here loaded up. Stream properties, forecasts. Nope, we got to get the forecasts. The PUDs, perfect. All right, so in 3, 2, Sprayberry. Yikes, Sprayberry location worth $2.2 million. What's a Wolfcamp worth?
Woo!
Wolfcamp, $4.5 million. Okay, so now we've got all the numbers that we need to come back in here and make our assumption here. Okay, so we've got.
Let me throw this in here while you're doing that. Wolfcamp is one tiny sliver, as we technically say, and then Sprayberry is a gigantic sliver of the pie. But the money you just mentioned, those are big well differences.
So what did I just do here? I took the PUDs. So we've got $4.5 million, 10% discounted cash flow for the Wolfcamp.
Right.
2.2. Let's just assume they're drilling more Wolfcamp than they're drilling Sprayberry.
Right.
$4.5 million. I should change this to a 5. Gets us relatively close to the 10 point, what is it? $8 billion. It's an $800 million difference.
That's not bad, dude.
So you've got cash plus equity for Oxy equals the sum. You've got this.
Yeah.
Let's go ahead and subtract this. So you're talking, excuse me, $380 million quote-unquote overpayment based upon the quick math that we did here. Now, the question is, are they drilling Sprayberry? Because if they're drilling Sprayberry, if all these locations are Sprayberry, well, we got to bring this number down to probably, what is it, 3.5 to compensate?
Yep.
Yikes. Now you're talking about a $2 billion thing. And this, Stu, is exactly where I wanted to go with this in terms of, okay, what's the value of all the other stuff they put on it? Whatever way you slice it, Oxy overpaid a little bit. The question is, how much did they overpay?
Right. And that goes back into their CCUS development and their net zero carbon management, because the injection wells, their machines out there, the water, there's a lot of things we have not looked at this that I'm going to have to go nose around on. I mean, from a total business model, there's a lot still left in there. And if you're only talking 350 million, I don't know that they overpaid that much.
So look at this. They paid $4.7 million per location. And so again, the question is there enough meat on the bone for this acquisition unless they hit, and this is, again, what they talk about, unless they come and hit targeted divestitures, okay? What did they say they're going to do? They're going to come in here, debt reduction to pre-acquisition target.
Right.
Debt reduction of closed acquisition. Aha, they want to go ahead and divest 4.5 of 6 billion assets within 16 months of transaction close. Where is that? The question is, what are they going to sell? Is it their Colorado asset? Interesting.
I would. It just depends. The legislation through regulatory actions in Colorado is pretty heavy.
Absolutely. So I think that's all as what is it? Who would say that's all, folks? I don't know who that is, but
that's all, folks. That would be Porky Pig. Thank you very much.
I do look like Porky Pig, so
no, I'm the guy with a triple chin.
That's okay. Point of it all is, guys, that is kind of a walkthrough of, okay, how do we figure out and how do people come to the conclusion, did Oxy overpay or not? I think the answer is simple. They overpaid a little bit, somewhere between a little and $2 billion, which depending on who you are, that's a big difference. Now, the question is the value that Stu talked about worth $2 billion? We'll never know the answer to that. We'll know in 10 years maybe.
I want to reach out to somebody at Oxy and ask them this question, because I think that they may have done a good deal. I'm going to stand out there and say this is a good deal, because I need to do some more research on it.
All right, guys, that's it. Another episode of Deal Spotlight done. Thanks for tuning in. We'll be back next time.